Welcome. My name is Chad Cohen. I'm the Vice President of Sales here at Credibly, and this is another episode of Credibly Explains. Today, we're going to be talking about bridge financing, what it is, how it works, and how you can use it to better your business. First of all, what is bridge financing? Bridge financing is an opportunity for a merchant to receive additional capital before they reach the point of a standard renewal, which we discussed in our last video, so please don't hesitate to go back. Bridge is designed for businesses that are performing well and have consistent revenue, but need an extra injection of funds for a specific validated reason. It bridges the gap from your current financing and your next major funding milestone, ensuring your business momentum isn't derailed by unexpected costs or sudden growth opportunities that come your way. So how does bridge financing work? Bridge functions as a completely separate financial transaction with its own separate contract and its own remittance. At Credibly, to apply for bridge, we ask for bank statements, a current month-to-date transaction report, a use of funds, and any information you can provide us that will help us understand why you need additional capital. This means that it is layered on top of your existing financing as an additional advance rather than consolidating or replacing your existing balance. The timing of the remittance can be on a different day than the daily or weekly remittance for your existing financing, since it is based on the funded date of your bridge deal. Because you're not using the new funds to pay off any existing balance, you receive the full net amount on the bridge offer. Every bridge has its own independent factor rate and rate of return. This allows for clear, transparent accounting where every dollar is working towards a specific purpose that was previously sent to our underwriting team. When you take a bridge, you're simply adding a second layer of funding. For example, you have an existing contract. We advance you $100,000 at a factor rate of a 1.34, which means you're going to pay us back $134,000. In this case, you need another $50,000. We provide this as a separate contract, and let's assume for this example a 1.31 factor rate, meaning that your total payback on this separate contract is $65,500. So in this case, you're going to receive $50,000 net minus any origination fee if there was any. You now have two separate remittances that equal a total combined payback of $199,500, less what you've already remitted on your existing contract. So when should you look into bridge financing? At Credibly, a large renewal requires that you're 45% remitted. You can, however, receive bridge financing before that. Bridge financing is most effective in two specific business scenarios after you've received your initial funding. Scenario A, specific use or emergency need. When you have a specific project or urgent repair, for example, a restaurant needing to fix a broken oven or an invoice for a vital piece of equipment, or when you need to maintain business stability during a temporary hardship to ensure your operations stay on track, such as industries in a slow season. Let's look at a second option, or scenario B, accessing previously approved capital. If you initially took less than the maximum amount you were approved for example, you were approved for $100,000, but only took $50,000 initially, we simply validate the use case and revenue for the additional funds to help you reach your full potential. Bridge offers a different use case than renewals entirely. It's not typically for larger amounts, but meant to bridge the gap between your initial funding and a large upcoming renewal opportunity. So in summary, remember, bridge means taking on an additional remittance, unlike renewals. In the renewal, you can keep your remittance fairly similar to the initial funding that you already secured. With bridge, you will get additional money, but there will also be additional remittance. Remember, you need to make sure that you can afford all the remittances that you take on, whether it's for initial funding or for bridge. And please work with a partner that's going to explain this to you and care about you and the health of your business. Thank you very much. My name is Chad Cohen. I'm the Vice President of Sales at Credibly, and you have just heard another episode of Credibly Explains.